Good evening, everyone. This is Joe Henches with Beyond the Chart, and today is Tuesday, May 27th, 2014, and this is the stock market analysis today. All right, I have got Twitter up here, and I'm going to go back to the Dow. We are going to talk about 4 of the social media stocks: Facebook, Pandora, SINA, and Twitter. Okay. So we're going to talk about those, but first we're going to talk about the market, the indices, and some of our indicators, and then I'm going to talk also about a new trade idea I've got on Diamond Offshore. So, all right, let's talk about the Dow Industrials today. We're up 69 points. Okay, it looks like the moving averages, we're getting a little bit of mixed signals here again. Okay, surprise, surprise. Seems like we've been getting this for months now. If we take out this high, then this whole thing about this being wave 5 of 5, that goes out the window because it can't be if we just take out the high. So that's a little bit of my uncle point on this scenario here for the Dow Industrials. And we'll just have to see. Again, you try to lay out what you think might be happening, and then you look to see, is the Dow step by step kind of moving in sync with that or not? Now it's a little bit clearer when we get back over here on the S&P 500 in terms of the wedge anyway. I mean, the wedge is still valid. We've got a nice strong move. Now, what's interesting is the look of this bar. It's really, it looks like a bullish, moving bar today in terms of the, up 11.38 points today. Another closing high. I mean, it's going to be like a broken record here. The moving averages are all aligned. I mean, the 10s greater than 21, greater than 55, greater than 233. So, I mean, it's perfectly aligned bullish to the upside. I mean, it's really hard to sit back and say, oh, wow, I'm going to be a raving bear here. I mean, the only thing that, draws the big question is the chart pattern that it seems to be carving out. Is this a rising wedge, a final diagonal type, ending diagonal type pattern? Let me take a look at this in here. And the divergence seems to be going away. So we could be morphing into something else, just like I think we're morphing into something else on the Russell 2000. I mentioned that before. All right, I want to look at the Dow Transports. Now, this is interesting on the Dow Transports. Okay, back in December, January, we had a little rising wedge, had a little bit of a throw over in here, okay, and then what did we do? We collapsed on down. Okay, that was the January sell-off into early February. Well, we're getting another rising wedge, and here we are getting a little bit of the throw over. So this is why I get wary, when I start to look and I see this, even though the moving averages are aligned. Well, the moving averages were aligned here too. 10, 21, 55, 233, didn't matter, okay? And we got some divergence in here. Well, we're getting some divergence in here too. Okay, so this is what's showing up on the Dow Transports. So that's the Dow Transports. Looked at the S&P 500, not as negative. And then the New York Composite, which is interesting too, because when you look at the bar on the S&P 500, okay, kind of a bullish bar today. And especially if you blow it, let me blow it up for you a little bit. I mean, that's a little bit more, I mean, look, it's the widest range. What is that? 10-point range or so, high to low. And here's like an 8-point range. So the widest range in the last, 3 days. This is pretty wide back in here. Okay, but when you go to the New York Composite, you get this compressed little doji bar, similar to what you got here before we rolled over and turned down. And, similar to right here at the peak and, before we dropped off. So it's hard to, I mean, this, and the New York Composite is a much broader indice. So that's what, again, throws you a little bit of a, it's like the market is always trying to, in my opinion, always trying to throw you a curve. Of course, it's like, if it was easy and everybody could diagnose exactly what was going on, everybody would be billionaires. Well, everybody's not. So, I mean, that's what we're trying to figure out here is what is this thing doing this time? Because it's always a little bit different. Okay, so now we still have this rising wedge in place. Okay, Had a little bit of throw down to the downside, thought we were going to go, but I mean, look, we've got the 10 above the 21, above the 55. I'm cautious. You know, I'm cautiously I'm bullish on certain positions, but I'm cautious because I feel like this is not because of these patterns. Okay, I weight the patterns more than I do the moving averages because moving averages lag. Okay, so that's why I weight the patterns and what the price is telling me more than I do that. Okay, let's take a look at the NASDAQ and then we'll go to the Russell. Now, I think the NASDAQ may be getting ready to make another run here to the, it's getting bullish in here, because of the way the trend lines are curving up. I think that what we may be doing is trying to come up and retest this high and maybe even go higher. So it's possible now, we thought before that maybe the NASDAQ and the Russell were leading us down. Well, maybe they were lagging us. Maybe us lagging the Dow, the S&P 500, the New York Composite, in that this might be the fourth wave down and we're getting to do a final fifth wave up into here. That's the scenario that I've got on the NASDAQ. That's the one that looks the most interesting. Let me blow it back down a little bit here. Okay, and what have I done with the trend lines? I connected the bottom of the 2 and what I think is 4. And here's where I got suspicious on the NASDAQ. Because of the way it was not a clear 5 waves down. It was because these things were overlapping. It was more of an ABC, kind of a 3-wave, then a 5-wave, 3, 3, 5. You need to see if this is really going to be a wave 1 to the downside, and if this was going to be the top, you had to have 5 clear waves in here, and it just wasn't clear. So now I'm starting to think, well, maybe this is 4, and we're starting to push back into the upside. Okay, Russell 2000. I think, again, I told you that I thought this was morphing into something else. And now we're breaking this trend line. We're getting this move to the upside. I'm starting to wonder whether or not, instead of this broadening top, that this is turning into a top. Maybe we're moving to the right side and come up to this height, be right around over in here, and we get a head and shoulders pattern. It's just something, I'm not predicting that. I'm just saying that's something I'd be looking for, okay? Now we could always, because we came down and tested right at the bottom in here, we could be just doing a 50% pullback. And what would a 50% pullback would be? Okay, if we did it from the top up here, down to the bottom here, a 50% would be on this dotted line. We're just slightly above where we're at. And here we are with the 55-day moving average coming in. So that could be happening on the Russell 2000, which would mean we don't have a whole lot more to the upside. Let's see. So we talked about the Dow, the transports, the Russell. Let's take a look at some of the indicators and see if they're telling us anything. The short-term trading index, nothing new. I mean, it's just amazing to me how much it's just staying right in the middle neutral. We are not getting extreme reading at all. And the CBOE market volatility pulled back up, so it's set this point. So we're kind of getting this divergence potential in here. I mean, because again, price went to a lower low. If you look at the price, and it's going to be the bottom of the red bars in here, the angle of this trend line is the opposite of the angle of this trend line, just like it was back over in here. When you look at the price, the closing price was right about in there, and you look at a trend line in here, it was different. It did not, this went to a lower low, this did not. This went to a lower low, this did not. So we could be getting ready to make a move in terms of selling coming in. And the last thing, now, again, here's another one to kind of throw you for a loop. I mean, we just got a big push on the high-low up to 199. Okay, so this is the highest reading since March 7th. In terms of new highs minus new lows, the net new highs minus net lows. So the net of the high-low index here is 199. So it almost looks like it's trying to break a little bit out of this congestion here. And this peak here is 192. So kind of risen just a little bit above this. How significant that's going to be will be determined whether we get follow through. So you're always looking for follow through. You know, it doesn't matter whether you're looking at that, you're looking at a candlestick bar, looking at a reversal bar, you're always looking for follow through. Okay, we're going to go look at Facebook next. Take a look at Facebook. Facebook's, what's interesting about Facebook in here is, I mean, the 10 is now above the 21, it is definitely rounding up, and it broke this trend line, okay? The only thing that's got me a little cautious about Facebook, it looks very similar to this, okay, to this move back here. Let me get rid of this. I'll put this over to the side. You guys can't see it, but it doesn't matter. All right, so this trend line got broken here, and you moved up, you started closing above the 10, you got the 10 above the 21, you started rounding up, and you went and you took off. The same thing could be happening here. The thing I'm a little more cautious about is the 21, which is the blue-gray line, just was down below the 55, not very much, okay? Here it was more selling. It was more of a move, but we could be heading back up to test this high up here. You know, so where is that? We're talking about a high of 72.59, and we're at 63.48. So that's, you know, I don't see, you know, the setup would have been as soon as I got it closed, buying like probably into this bar right here. I didn't do it because I'm still cautious on the bearish. When I look at the Elliott wave, I think we may have more to go to the downside, but you never know. And the stock's going to telling you what to do. Right now it's bullish. Right now it's looking bullish. Okay. So let's take a look at Pandora. Pandora looks like a little bit of a bear wedge in here, okay, but we got the same type of thing. It's, you know, the 10 is breaking above the 21 for the first time in like 2 months, okay, over 2 months. So it broke down below the 21 here. It's breaking above the 21 here. So you start to think, well, wow, that means we ought to go. Well, look at the 55. 55 is down pretty sharp. This does look like a little bit of a bearish wedge in here. And this trend line, when you back it up a little bit, this trend line is a little sharper down in terms of the angle of descent versus Facebook. Let's come back and take a look at Facebook. Facebook is flatter, okay? The flatter, the better. When you get a break of a flatter trend line, it's a better move. It's a stronger move that you're going to get, like back in here. The steeper the trend line, the less trusting yet you can have on the break because it's too steep. It's just not going to carry any momentum with it. Okay, the next one is SINA. I'm probably mispronouncing that, but boy, this is still in this downward trend channel, and it's breaking to the downside and have this big reversal bar in here. It's really tempting to say, wow, let's buy off of this because it is a bullish engulfing bar. Outside, higher high, higher low, entire bullish engulfing bar in here. But notice how today we did not break the high of Friday, last Friday. So it's kind of interesting. We didn't get the follow through, didn't get the bullish follow through on this bar. Now you still may get it, and it may be a play that you want to take. That's not something I'm recommending right now. It could be, the risk that you would have is to the bottom of the bar. Okay, so if you said, well, let me see if I wanted to get in to play this to the upside, the high is 46.91. So at 46.92 or 46.95, I'm buying. Well, then your stop is going to have to be at the bottom down here at 42.40. Okay, so 42.39, 42.35, something like that. So you're going to have 4.5 points at least of risk in the play to take that trade. So if that's acceptable to you, maybe you want to take that trade because of the way that bar looks and if you get the break of the high. Just a thought. Okay, and the last one is Twitter. Okay, and Twitter looks to me like we're well below the initial public offering range over here. So this thing has been in down mode, just sell, sell, sell. Now, it's interesting is look at the volume. This looks like huge capitulation, okay? and that occurred on this move in here. Okay, now the other thing to look at is this looks like a possible W bottom. Now we need to get that, but it looks like a possible W bottoms setting up. And you know, W bottoms are what causes things to move. You know, W bottoms and M tops. Okay, you know, here kind of like break the top, and of course you meandered back over here to the right, but you get the point that I'm trying to make. So this is a possibility in here with Twitter. Again, this is not a trade recommendation. I'm not putting on trade ideas. I'm just thinking it's a possibility that could set up to the upside. Okay, that's it for tonight. We've gone a little bit long. I apologize. Let's see. Tomorrow is Wednesday. We'll be back tomorrow evening with another update. As a reminder, I would be very grateful if you would share the post and the video on social media. If you're a subscriber, forward the email to a friend. And if you're not a subscriber, follow Beyond the Chart and get email updates, download the free 5 Essentials PDF, and gain access to the Trade Ideas webpage. And we've got some things I'm cooking in the back burners here that I'm going to be talking to you guys about in the next few weeks. So just want to give everyone a heads up. So, all right, this has been Joe for Beyond the Chart. Have a great Wednesday.